Good day and good afternoon to the more than 100 people who are with us today from the US, Europe, Africa, and many other places. We greatly appreciate your participation. I'm Steve Mark, and I have the privilege of serving as the board chair for MicroLoan Foundation USA. Our goal at MicroLoan Foundation is to reduce poverty and provide economic development opportunities for women. We provide financial literacy training, digital solutions, small business mentoring, and microloans to women entrepreneurs in rural areas in Malawi, Zambia, and Zimbabwe. We work to help them develop livelihoods for themselves and start expanding or start earning their income. We've been at this for over 20 years, and we've helped over 400,000 women build businesses with our support, which in turn have benefited the 1.6 million dependents in their care, enabling us to impact the lives of over 2 million women over the last 21 years. We're so thankful to be here today to share some thoughts with you. In our conversation, we'll review some of the challenges facing women and women's financial inclusion and outline some of the critical linkages between society's social norms, gender inequality, and financial inclusion, and how they impact women's financial empowerment and access to finance. We'll outline a variety of solutions that are being utilized today, including initiatives and solutions aimed at better understanding women's needs and bridging the gap between women's financial needs and the availability of appropriate products and services. And we'll share some insights into future solutions and the importance of collaboration to truly make a difference. So why is there such a focus on women? While it's true that many people living in poverty face similar issues, women are severely disadvantaged over their male counterparts. This begs the question, do financial products and services with a one-size-fits-all approach overlook the needs of rural women? And I think we would say the answer to that is yes. Women are 50% of the world's population, yet control 2% of the world's assets. And gender norms often limit the ability of women to own property, get a secondary school education, or access financial products and solutions that would help move them out of poverty. Almost 60% of unbanked women, of the unbanked across the world are women. They're overrepresented in the underserved population. The gender digital divide, such as lower ownership of mobile devices, is a significant impediment. For example, women in sub-Saharan Africa are 13% less likely to own a mobile phone than men. They're more impacted by climate change, and they shoulder more of the family care responsibilities than men. On and on I could go, but we want to hear from our panelists, not just about the issues, but about the incredible array of solutions that are available today and that are being developed to help address some of these issues. We're fortunate today to be joined by three women who have a variety of points of view and expertise in all of these areas. Elizabeth Kiamba, based in Washington, D.C., is a financial sector analyst with CGAP, the consultative group to assist the poor that's housed within the World Bank. It's a global partnership of more than 30 leading development organizations that works to advance the lives of poor people, especially women, through financial inclusion. She engages with funders, global advocacy bodies, and support organizations to provide guidance and advocate for effective financial inclusion. She also works on projects focused on digital finance solutions for last mile clients to improve livelihoods and access basic services. Jessica Espinoza, joining us from Spain, is the CEO of 2X Global, a global industry community for gender lens investing that convenes the entire spectrum of capital providers. She's also chair of the 2X Challenge that has raised more than $11 billion US of gender lens investments since its launch at the G7 summit in 2018. Jessica has a long track record in originating, structuring, and executing debt, mezzanine, and equity deals in emerging and frontier markets. She also serves on several boards and has private equity and venture capital investing experience. And finally, Maida Wilson, who's the global CEO of MicroLoan Foundation, is with us from London. Maida oversees the activities of MicroLoan's operations in Africa and is responsible for developing the overall strategy for the group, including digital transformation and product expansion to better serve some of the world's most financially excluded women. She's got extensive experience in financial inclusion and senior operational roles in emerging and frontier markets across Asia and sub-Saharan Africa. So let's begin. Elizabeth, Would you mind providing some context for some of the core issues and challenges when it comes to women's financial empowerment and inclusivity? Thank you.
Thank you. Thank you so much, Steve. I think some of the answers to your question lie in your own introduction. I think you touched on that, and it's true, we can go on and on. But I feel like there are still, there's the need to emphasize some of those issues and challenges. And some of the core issues are around social and gender norms. And I think just to lay out what these are, they're sort of collectively held expectations and perceived rules of how one should act based on their gender identity. And they can be pervasive and reinforced by individuals and institutions. And in the end, they affect the behavior of participants in financial markets and can really lead to the exclusion of women. I think you gave some examples, and just to highlight one, there are some requirements sometimes by financial service providers to have women obtain a husband's signature in order to open an account or apply for a loan. Or, you mentioned collateral requirements where women need title deeds or collateral for immovable property, when we know very well in a lot of middle and low income countries, the gender norm is such that women do not own these kinds of property. And therefore that limits their ability to access that particular financial service that has that requirement. The other thing I'd like to highlight is the ID requirements, identification requirements. And we see that in order for a financial service provider to get to know their clients, that is the KYC requirement, they need women to identify themselves. And we know a lot of women across the developing economies do not have such identification. So just to put this more broadly, gender norms on the demand side can create barriers to women's mobility, their ability to also engage in the productive economy, their ability to control and own assets, as well as their financial decision-making. So for instance, we've heard of cases where women are pushed by their husbands to apply for a loan because the husband is probably not eligible, or that loan facility is targeted at women. Like in Kenya, we have Uwezo Fund, we have these small initiatives that aim at enabling women to access financial services. But then we've heard a lot of women say that, well, I applied because my husband asked me to. So these are some of the issues around gender norms. And one other thing I'd like to highlight is when it comes to digital financial services, women do not own a lot of smartphones, a lot of digital tools and devices that enable them to access these digital financial services. And that's a major challenge. And to add on to that is that women, from our research, we're seeing that women are less likely to use these devices to access services like information, entertainment, and social media. And so this limits the ability of those digital financial services to have to obtain the data trails that are necessary for building financial services for women. And as a concluding remark to the challenges, we've seen a lot of financial service providers consider their financial services to be gender neutral, but gender neutral does not work for women because women have very differentiated experiences, lived experiences and realities. And so I think it's important to look at these experiences and to build financial services with these gender norms and, access to assets, mobile phones in mind.
Thanks, Elizabeth. There are certainly a significant array of challenges, and unfortunately, they all tend to reinforce each other, as you mentioned, and it makes it very difficult for women to access even solutions that on paper look like they could be very helpful. but there may be some real barriers to having them access those solutions in a way that actually works for them. So let's start turning to what organizations and people are doing to actually address some of these issues. So obviously, women are not a monolith. They're not homogenous. So organizations need to be aware of the specific cultural norms in the areas in which they operate. And we think about how trying to understand the needs of women to develop the right solutions. Jessica, maybe you can tell us a little bit about what you're doing with the 2X challenge and how it's evolved to make sure that you have a real impact on women with the solutions and the ideas that are being developed. Thank you.
Thank you, Steve, and hello, everybody. Really nice to be here in this panel discussion today. You've already mentioned a little bit in your introduction, but just to kind of set the scene on the 2X challenge, we started in 2018 with an initial commitment by the development finance institutions at the G7 summit, where for the first time, basically in development finance history, we made a collective commitment to jointly invest and mobilize at least $3 billion with a gender lens by the end of 2020. So it was a 3-year challenge, and we gave ourselves a $3 billion target. And at the time, everybody thought that that was incredibly ambitious. And it was also a bit of a leap of faith, because at the time, there wasn't really a very clear definition or shared understanding of what we mean by gender finance. So the first thing we did was to form a working group and to engage with the broader field of development finance and impact investing to develop the 2X criteria as a shared framework of what we mean by gender lens investing or gender finance. And the 5 criteria that we developed, I'm sure many of you are familiar with them, but just to recap briefly, focus on ownership, so companies founded and owned by women. Then leadership, looking at the share of women in senior management and on the board. Employment, looking at the share of women in the workforce, but also quality indicators that go beyond compliance of how women are valued in the workforce. So focusing, for example, on policies and practices. The 4th one, very important for today's discussion, product design. So consumption, women as clients, for example, of financial institutions or of consumer of products and services. And then the 5th one, because from the outset, we knew that a lot of our investment would go through financial intermediaries. The 5th criterion says that we would look at these 4 criteria, both at the level of the financial institution itself and at the level of the portfolio. And I'll come in a moment to why this is very important, especially for today's discussion. So we then went on and started making investments. And what was really key to our success was to have that working group and peer learning and to collaborate on investment deals as they were happening. So for example, if one of the 2X Challenge members would make a new investment into a financial institution or microfinance institution and wanted to really structure this in a way that generates positive impact for women, we would all collaborate and provide advice and maybe even co-invest on that project to make it more gender smart. And that means for us looking both at the criteria, but also looking at the principles and the spirit of the criteria. And so to give you a very concrete example, we've seen that a key learning or insights from that practical work is that it's not just enough to look at a high share of female clients. So, otherwise already in 2018, we could have gone out and just said, oh, this financial institution offers microcredit and they have 80 or 90% of female clients. So check the box, gender finance. We already realized very early on that that was not enough because we saw this disconnect between products and services that were targeting the women's market because of lower NPLs and the whole business case that we're now all familiar with. But that these products and services were designed often by men in a financial institution office without ever having talked to the customer, understanding what are really their financial needs, what's the reality, what What are they looking for? What do they appreciate in a financial institution? And so there was often this mismatch between the products and services that were developed by financial institutions and what women actually needed as entrepreneurs or as clients more broadly. And so we started paying much greater attention to gender smart product design. And it's, in essence, it's quite simple. It's kind of textbook first semester, how we learn how to do business, that we go out and talk to customers and do market research and then design products and services that take those needs of customers into account. The other thing that's related to this is we noticed, and that's also context specific. So the 2X work has been focusing across mostly emerging markets. Now we're also doing more work in developed markets, but in the earliest, mostly in developing markets. And we've noticed that in certain regions, it's more pronounced than in others, but it's generally still an issue across the board that we have this disconnect between a high representation of women as customers, but an underrepresentation of women in leadership and among employees of the financial institutions or microfinance institutions. And so those who are making lending decisions, who are designing products and services, also tend to have a very male-centered perspective on those decisions, on that design. And so there's, again, a disconnect. So those are some of the areas where we've really taken a more holistic approach in how we invest and also support financial intermediaries in designing products, in becoming internally more diverse, and also in how they work with their female customers. Fast forward, I mentioned the $3 billion target for 2018 to 2020. We ended the COVID year 2020 with $11.4 billion invested and mobilized. And that was really, it really felt like a challenge and a big achievement, also considering the COVID year and concerns that pipeline might dry up in general. But the COVID year was our strongest year. And we have since evolved into 2X Global, which, as Steve, you mentioned, is a global industry body for gender lens investing and gender finance that's now convening over 100 member institutions across the spectrum of capital providers. I'm happy to share a bit more later on in the discussions around how we looked at gender norms and social norms in specific contexts and are informing our work from that perspective as well. But back over to you, Steve.
Great. Well, thanks for sharing all of those insights. And it's an incredible achievement to set a $3 billion goal and end up with an $11 million actual outcome. That just really speaks to the size of the need. And even $11 billion is tip of the iceberg in terms of the scope of the hundreds of millions of women who really need the appropriate solutions. And as you mentioned, the difficulty in developing solutions with the right information, understanding women, and making sure that the solutions actually work in the context of where the women are existing and with their families. That's a great lead into just some insights that Elizabeth can share from CGAP around segmentation and really trying to understand women's needs at a deeper level. And then we can hear from Maida, just to keep building on the same theme around some of the actual solutions and the experience that MicroLoan is seeing out in the field. So Elizabeth, maybe start with you.
Thanks again, Steve. Yeah, I am glad that Jessica's work is also picking up on the same things you're picking up here at CGAP. We carried out a research to understand the segmentation of micro enterprises, and one big factor to segment micro enterprises into is gender. And we realized that there are quite differentiated experiences between male and female entrepreneurs with respect to access to resources, experience with all types of financial and non-financial service providers, and their willingness to grow their businesses as well as their risk appetite. And, our research found that women seek stability with their financial service providers, and also prefer financial service providers with female representation. So I was very glad to hear Jessica mention that at times these financial service providers have men seated making decisions and also designing products that, need to be suited to women's financial service needs. Also, women micro and small enterprise owners who are looking for significant funding are more likely to pick providers that feature women as clients in their advertisements and marketing vehicles. So that's another tip for any financial service provider looking to target women. And they also like to interact with female representatives at these financial service providers, whether it's a bank or an MFI. So that's quite aligned in terms of, this segment of micro and small enterprises that are run by women. We also saw that digital solutions provide women with safety, trust, and transparency with commercial exchanges, and that also use of digital financial services and platforms make women feel less threatened when interacting with male clients. However, women's adoption of technology can be a bit slow and limited by various factors. I think we discussed this earlier. And so when a financial service provider is setting out, whether it's a fintech or a traditional provider is setting out, then there's need to think about some acquisition strategies that work. I've mentioned the advertising, but also leveraging peer referrals, creating a small group of women who take up this product first and then refer this product to other women. But also focusing on a high touch approach in delivering this product at first. I think when we think about digital solutions, we think about them as, hands off. It will take off, people will sign on remotely, they'll engage with the financial service remotely. But what we are seeing in one of the pilots that we are running for a working capital solution among women retailers in peri-urban Nigeria is that in as much as the solution is embedded within the WhatsApp platform, WhatsApp is perverse, it's everywhere, everybody uses it. We're seeing that simplicity in itself does not by itself go a long way in ensuring that the women take up this working capital solution. We're still seeing that fintech has to go out and send out agents to talk to these women and guide them through the clicks and the screens and how to order the stock and how to reorder. And, it's not very intuitive that digital financial services, however simple they are, will be taken up. So I think at the end of the day, what I'm saying here is that women are not all the same. You will go to urban areas and women will have access to a smartphone and they'll take up that digital solution quite quickly. You'll go to a rural area and you have to do a lot more work to get buy-in to that specific financial service. So segmentation is important, quite important for providers to think about and to also take steps to understand what works for different clusters of women. Back to you, Steve.
Thank you. That is so important. And when you think about the level of detail and nuance that providers really need to think through in order to really deliver effective solutions, it can be pretty daunting. And over the last 21 years, MicroLoan Foundation has worked with women in different contexts, in different countries, with different types of businesses. And maybe you can share some of the things that we've seen and that MicroLoan is doing today to help women across the various countries we serve and with different types of products and solutions.
Yeah, absolutely. Thank you, Steve. And I think what I want to bring in is, the perspective of financial service provider. We heard from both Elizabeth and Jessica on how they see the space and, the gender norms and, from an investment angle, how this affects, financial inclusion, etc. But from a financial service provider, what MicroLoan does, just to give the audience some context, is we work 100% with women. So it gives us a very unique perspective of women's financial needs and product design. And we work in some of the most rural, underserved regions of sub-Saharan Africa, in Malawi, Zambia, and Zimbabwe. Many of the women that we work with have low levels of education, low literacy levels. Many are first-time entrepreneurs, so they've not had any experience in starting or running a business, and virtually no credit history. So there are several layers removed from formal financial institutions, from many formal financial institutions. So our model, the core focus is really to go into these rural areas. We set up branches in these regions where virtually no one else exists. And the entry point for loans is very conducive for even first-time entrepreneurs. Just to put things in perspective, some of our starting loans are as low as $25. And we always complement this with financial literacy and business skills training. And we do it in a way that's easily assimilated by these women. So if you think about the context that we work in, giving them text or brochures or documents would not be a feasible option. So what we do is we incorporate role play, song, and dance as a way to provide this training, ongoing training during the loan program. So we have a very high touch approach, which enables us to better understand the nuances of women's lives and livelihoods. And that in turn translates into how we design our products. We heard from Elizabeth on the mobile banking being a real game changer in terms of financial inclusion. But she also suggests that there are challenges because of women's low level of equipment. They're less likely to own a mobile phone than their male counterparts, or they don't have sufficient income, low levels of education. All of this contributes to the fact that actually, interestingly, I think the World Bank did a study which said, despite the technological advancements in sub-Saharan Africa, mobile banking had actually led to the worsening of gender gap in financial inclusion over a 6-year period. And this is perhaps the reason, the fact that women face these socioeconomic barriers. And we're also absolutely right in saying not all women are homogenous. And we see that even in the 3 countries that we operate in. Malawi, Zambia, and Zimbabwe, despite being neighboring countries, have very different landscapes in terms of mobile money adoption and ability of the women on the ground to use these services in a meaningful way. So let's take Malawi as an example, where the mobile money landscape is not as mature, I would say, as the ones we see in Zambia and Zimbabwe. We actually, before rolling out mobile money in some of our branches, we haven't done a full-scale rollout, but we have started in some of our branches. There's a lot of background work that needs to go alongside this rollout. So simple things like, do women have a national ID? And if they do, then can we help them get a SIM card registration to set up a mobile money account? The whole push towards digital is also the convenience factor. So we can't just roll this out expecting everything to move smoothly, just like Elizabeth pointed out in her discussion. But what we also do is to ensure that the landscape, the availability of mobile money agents, is there a presence in the areas that we're operating? Do they have sufficient float? Is this actually going to be convenient for our clients, or is this going to be an additional burden? These are the questions we have to ask ourselves before introducing something like this. And similarly in Zambia, where we're doing this on a much larger scale, disbursements and repayments are happening using the mobile channel. COVID was a great catalyst in some way in accelerating the adoption of digital platform for savings. And we're currently piloting a savings platform where we're working with a network provider. And we've had to customize it because the one size fits all approach just doesn't work. So can we customize this platform to ensure that it actually makes or adds value to our end clients? Simple things like using number options for women to save, as opposed to large pieces of text, was a simple tweak that we made to ensure that our women clients are able to use these services better. So I think the key really is, with digital, it has great potential for us to increase financial inclusion in women. But I think the key point I want to make is we need to adapt and modify our services, keeping in mind the end client. The last point I do want to add, and maybe Jessica raised this earlier when she was speaking, is that all of this is great. We've set it up, we serve 100% women, but is it actually serving the end goal? And how do we go about doing that? I think from MicroLoan's own perspective, what we do is we have a very robust social performance management system. In addition to monitoring, default rates and all of that, the questions we need to ask ourselves is, are clients better off over time as a result of our services? Are they able to generate income in their business? Are their profits increasing? Are they able to send their children to school? Is it leading to better nutrition in their household, etc.? So these questions are really critical in ensuring that our products are appropriate and actually, our work, is it yielding the results we think it should be? So I'll end with that, and then I'm sure we'll share more insights through the following questions. Thanks.
Right. Thanks, Maida. So Elizabeth and Jessica, just building off what Maida was talking about, having specific examples of some of the things that you or your constituents are working on and actually executing are so informative to highlight both the understanding of the issues and the design of solutions that really help women move forward in the financial system. And maybe you can each just share a couple of the examples. We spoke over the last couple of weeks about some of the wonderful things that the groups that you're working with are involved with. So maybe I'll start with Elizabeth and then move over to Jessica.
Thanks, Steve. I think there are quite a number of initiatives. Here at CGAP, we continue to work on social norms. We continue to create awareness for both funders and investors, as well as financial service providers, to dig deeper and understand customers as they seek to build financial services. And I think Jessica can point to our collaboration with the 2X challenge on embedding social norm diagnostics into the investment process and maintaining customer centricity at the heart of investment analysis or due diligence work, so that investments really do play a great role in bringing in women into the financial services or provision of better financial services for women. The other thing is we are pushing for more better indicators for impact around the role of financial services in women and their livelihoods. I think that's also part of what our collaboration with the 2X Challenge and other actors is about. I think in the past, it's been more of how many women are getting served by these financial services. And Maida, you really pointed to this in your discussion just now, that we need to look at the social performance or the outcomes from women's engagement with financial services, just rather than the number of women being served by a particular financial service provider. Another initiative is we have here at CGAP is around the Women's Economic Empowerment Measurement Learning Collaborative. That's a collaborative between the Center for Global Development, CGD, the Data 2X, and FinEquity. And they've launched a joint body of work since October 2021 to promote simplified and harmonized approach to measure what we call women's economic empowerment in the context of financial inclusion programs and initiatives. So just to highlight a few of the initiatives here at CGAP around women's financial inclusion.
Thanks so much. There's so many layers to really understanding the right solution design, but as you mentioned, measuring the impact and focusing on outcomes is such a critical part of trying to understand whether a particular solution is working, needs to be expanded or revised in order to have the desired impact. And a lot of the data we see comes both from objective sources, whether it's just metrics, and a lot of input also from the women that are actually using these products and services. So we talked about high touch earlier, having people who are actually interviewing and speaking with the women who are utilizing the products and services, understanding their experience and how they actually work with those solutions and determining whether they are in fact having the desired outcomes is just a critical part of this. Jessica, certainly within 2X Global, the various constituents that you have, there's a lot of really interesting solutions that are being developed, and maybe you can share some of those.
Yeah, happy to. So maybe to tie this back to some of the social norm issues that we have seen. It started a few years ago when we were deep in the first 2X challenge, and really looked at our work with financial institutions when we realized that sometimes social norms go quite unquestioned and aren't necessarily evident in a kind of a local context where they are so common and widespread, and have always kind of practices that have always been this way. And we noticed that this means that sometimes credit policies, for example, are actually quite discriminatory, and that is often at odds with the mission statement or the external positioning and kind of the intentions of the financial institutions to empower women or improve the lives of women. And so as we discovered this, we, for example, noticed that there were often credit policies where, and I think Meta and Elizabeth mentioned some of these examples earlier, where, for example, unmarried or divorced or widowed women were excluded from the credit policy. So it was only for married women within a certain age bucket, for example, or requiring the husband's signature even when there was no actual kind of substantive reason for it. It was just kind of a practice. And so we discussed these cases a lot in our working group and found ways of working with financial institutions to set a different example and change those common practices in their market. In a way related to this, I think are all of these unintended consequences of financial inclusion and women's economic empowerment. So for example, we've seen in certain contexts that when women make gains on the economic empowerment side and financial inclusion, that because of social norms now less kind of embedded in the financial institution, more in the context of the community, that women might face an increased risk of gender-based violence and harassment. And so those are the things that we now take much more into account than we have perhaps done in the past, because we see those connections and we take a much more holistic perspective on women's well-being and empowerment and kind of, the social performance aspect. And so over the last year, we have been collaborating closely with CGAP on social norms and financial inclusion. And there have been a few resources have already been shared in the chat, but this has been a very rich engagement with a group of CGAP members and 2X Global members who are active in financial inclusion, and where we have gone much deeper into examples of what are actions, like what are some of the issues that we're observing and what are concrete actions that financial institutions can take. And perhaps to share 2 very quick examples of what we've seen with financial institutions. For example, in Mexico, we've been working with a leasing company focusing on micro, small, and medium-sized businesses who were very keen to target the women's market. So they did market research. They identified that women as a customer segment was significantly underserved or was unhappy with the available financial services and products, and were quite intentional about product design. And so they reached out and did focus group discussions to really learn about the needs of women that they had identified as their target market. But what was important was that they didn't only focus on their financial needs and kind of very strictly the economic empowerment or financial inclusion aspect, but also how, for example, social norms restricted women from starting a business in certain sectors or kept them in low margin, kind of female dominated sectors, even when perhaps they had other strengths or other desires and were just held back by gender norms. Or for instance, how their confidence was impacted by gender norms, their confidence as an entrepreneur to grow their business, or kind of social norms and expectations around motherhood and how that would pair with their role as an entrepreneur. And so they developed a number of, they started new partnerships, for example, with a Women Entrepreneurs Network, provided more mentoring services, non-financial services, and thereby really helped them to become bankable, but also increase their overall well-being and kind of the value proposition for women as customers. Another quick example, in Zambia, we've been collaborating with a bank who is quite well positioned in the agribusiness space. And we realized that despite many gains in financial inclusion, women, especially entrepreneurs, small entrepreneurs at the forefront of climate action and in the agricultural space are often still excluded. And so they also took a customer-centric approach and designed products and services specifically tailored to the needs of women in agriculture, and who are also having a significantly positive impact on the climate action side.
Thanks. Just an endless array of really, really informative examples. Thank you for sharing that. Just wanted to mention to everybody a couple of things. One is in a few minutes, we'll have time for some Q&A. So please think about questions you may have. I already see one in the chat, pop them in there. Secondly, in the chat, as Jessica mentioned, there's a lot of information that's been shared. So feel free to take a look and click on the links, and hopefully those are informative. As we close out some of our remarks, Maida, I was wondering if you could share some examples of how MicroLoan Foundation is incorporating gender norms into the work that we do. And then also, I'll just sort of bridge to the next thing. If you could leave people with a takeaway, what's one call to action? And I'll ask Jessica and Elizabeth to take a minute on that as well.
Okay, great. So I think some of the gender norms that we face have already been highlighted. The key ones that are probably relevant to our work is perhaps the fact that, women cannot take independent financial decisions. They require the consent of a male in their household, or women are primarily seen as caregivers and not breadwinners, and they therefore cannot own large businesses is a common one. We also talked about inheritance laws. So through our product design, we talked about the entry requirements for women into our loan program. It's deliberately kept, average loan sizes are deliberately quite low. We do not, by designing our products such a way, we do not require consent of a male member, etc. We ensure that it improves participation amongst women in these rural areas. Having said that, there are still some, quite pervasive and regressive social norms. which really come in the way of true empowerment. And how are we addressing that? I think the training, financial training, and in both business skills and financial literacy is really a key component of our work. I've talked about this before. But what it does is it really arms the women. When women are armed with knowledge and the skills, it translates into awareness and eventually confidence. And that goes a long way in reversing some of these gender norms. Even in the agricultural space, what we found was a great example was, Jessica mentioned this, women tend to be less productive than men. They have fewer skills, they use less technology compared to male counterparts. So in the agricultural space, and we work primarily in agricultural economies in Zambia, Malawi, and Zimbabwe, most of our clients are smallholder farmers. And what we found really valuable is partnerships with organizations that have agricultural expertise that can actually provide the skills and training to these women so that they are able to take more informed financial decisions. And that leads to, better output and productivity. Our products, currently for majority of our women don't require collateral. So inheritance laws in these countries do come in the way, but not so much for majority of our products. But what we're increasingly seeing is some of our clients who've been with us for several years have now made the transition from small to sort of SME individual loans. And there, we're currently, this is very much, at the pilot stage in both Zambia and Malawi, but where we're seeing these issues crop up is, of course, asset ownership. Because inheritance laws in these countries favor men over women, many of these women do not have assets to offer as collateral. So it's given us a real opportunity to think about what can we do in our product design that can get around this. Can we use alternative methods? For example, can we use repayment history, cash flow based assessments, and some other forms of collateral apart from assets? So it's given us a few thinking points, and it's just something that we will hopefully fine tune in the months to come as we look at this space. I know we're running short time, so I think you mentioned call to action, so I'll get to that. Yeah. So I guess call to action from my perspective, it's mainly for financial service providers. I have two. One I've already alluded to before is invest in a research SPM function if you don't have one, because when we're looking at product design, this is a really critical factor in ensuring that it's as robust as possible, keeping in mind the end client deal. So let's be driven by data and not by perception. And the second one is, when we're looking at innovations and considering the countries we work in, specifically in sub-Saharan Africa, a lot of it is uncharted territory for all players in the ecosystem, whether it's the financial service provider, the intermediary, the regulator, or indeed the end client. So financial service providers are really in a unique position because they're in the front line and they have direct access to client and can, witness firsthand the impact that these innovations are having on the end clients. So I would say financial service providers really need to be proactive in engaging the other players in the ecosystem, giving them feedback on an ongoing and timely basis in order to address some of these bottlenecks and challenges that these innovations are providing, so that the end result is a better outcome for the end client and for the organization. So I'll end with that. Thank you.
Great, thank you. Jessica, your thoughts on a call to action for people who are with us today?
So I think my key call to action is adopt a gender lens in product design and make your products gender smart by taking a customer-centric approach around women's real needs. And while doing so, make an extra effort to consider the role of social norms and the role that they may play in your specific local context, and also consider any unintended risks that could stem from those social norms. And I think it's a great advice to look for partners. So if you're unsure about how to do it, get get a specialist consultant or a partner on board, or look for an organization in your local context who might help you with that.
Wonderful. And hopefully our remarks of the last 45 minutes have given people some really good food for thought on your call to action. And Elizabeth, can close us out before we go to Q&A, please.
Yeah, I think Meda and Jessica have done a great job at, the call to action. I certainly agree with all, their points. I would just want to say to financial service providers that women are a very viable segment and to serve, and all that it takes is for a little bit more effort in understanding, their needs, as well as, supporting additionally, not just thinking about financial services plainly, but also what support they need in order to really use those financial services, as well as the kind of non-financial service that, guides them as to how to grow their businesses so that they keep coming back for these services. So just to add that in to the rest of the calls to action. And of course, social norms play a great role in determining how women engage with different aspects of financial services.
Thank you so much. So again, if you have a question, please type it into the chat. We'll get to as many as we can, and we'll be happy to follow up with you afterwards if we don't end up having time to cover your specific question. Let's start with one. How do your various organizations address the issues of financial sustainability in women-led businesses, taking into account the challenges that we've talked about, gender norms, economic shocks, life cycle transitions? And are there any additional examples that are specific around how to build resilience in the longer term? So I'll open it up to whoever wants to jump in.
Yeah, I can start. It's a great question. I think the first part of it, I would say, is, we use like the social performance management, the research function is a really valuable tool in helping us, guiding us with product design and seeing if it's actually appropriate. Are there issues that women are facing? I'll pick up on a particular example with Malawi. We've been affected by cyclones and floods over many years. This year, we had one of the worst floods in the country, and it has affected a majority of our women clients, especially in the southern provinces. This is an ongoing issue for us. So how do we build resilience? Because we can't predict when the next floods are going to come, when disaster strikes, etc. So this is a challenge that we're currently facing. Our current product suite does not have a microinsurance, but this is something that we're looking at increasingly. Also, from an agricultural point of view, I mentioned earlier that majority of our clients are smallholder farmers and rely on agricultural income during the year at some point. So are we able to link them this is where the partnerships plays a very key role, where they're able to provide technical advice to our clients to say, okay, can we develop alternative crops, or can we develop alternative sources of income to help ride that wave, when they do face disasters, especially related to climate. So those are some of the examples that I can provide from our work.
All right, let me thank you very much. Oh, go ahead.
I can just add on the part of CGAP, since we are a think tank, we are really focusing on thinking more about what are some of the adjacent services that, say, micro and small enterprises, women-run micro and small enterprises need. And as I said earlier, I would say sustainability can come from simple actions such as bundling financial products with non-financial products, because women want assistance with their businesses and financial planning as well. And what happens is that when they plan their businesses better, then they're able to stay in business for long and they're able to, have good matrices that enable them to access more financial services. Also, things like we're advocating for understanding women's family obligations. And so if, if a financial service or an interaction with a woman needs them to leave their care obligations, then that business will, that woman's business will not stay afloat for long. So I think it's still, again, it's all about understanding what's adjacent to these businesses that needs to be taken care of. I think Jose Meda, who talked about financial literacy and training, those are some of the adjacent services that can really help build sustainability with the businesses, as well as sustained access and use of financial services.
Great, thank you. Well, that's actually a very interesting lead into the next question that came up. And we think about partnerships and collaboration. There are many actors in the overall ecosystem, and the government is certainly a major force in setting the stage with policies that can not only impact the day-to-day lives of people, but also gender norms. And one of the questions that came in was, what do you all look at in terms of working with governments, or what you're seeing from the governments in the countries that you're operating in terms of policies, or how are you working with them to try and influence adjusting policies to positively impact the ecosystem and gender norms? A lot in there, so I'll just look for thoughts.
Okay, I can go again. I think, was it in Malawi and Zambia, Zimbabwe, we have different policies in place, but I'll pick up the example of Zambia. We actually worked, the government had a big push towards financial inclusion, specifically for women. Earlier, we talked about, mobile phone ownership. It tends to lie with men because it's an expensive asset to own for many, and women do not have the means to do so. So I think the price points were adjusted in such a way that more women were able to have ownership of mobile phones in the country, and we took advantage of that. So that we could, many of our clients were able to get access to a mobile phone, especially when we were going digital. So there's been a little bit of collaboration on that side with the government. We also talked about, or maybe we didn't, women tend to also be more price sensitive than men. So when it comes to mobile money and you're pushing for digital, the cost of transacting using that channel, there is a cost. And of course, the saving is very much, we pitch it to our clients to say, actually, you're saving on travel costs and other, there's savings in mobility and time costs, by using the digital channel. But engaging with the network providers, not so much the government, has also been very much in the forefront of our discussions, because we've said, actually, can you reduce the if you bring in volumes, are you able to reduce the cost of transactions for our clients so that it increases the uptake from women clients? So we've been working alongside, I guess, different actors in the ecosystem to ensure that we are able to increase women's uptake in using these services. In Zimbabwe, it's a completely different landscape. It's been mobile and digital for a long time, more out of necessity than anything else. They've had a shortage in currency, so everything is done digitally. So we see that, women there are more advanced in their using of mobile phones and technology than in Malawi and Zambia.
Thank you. Just sorry, Elizabeth, looks like you have a thought.
Sorry, I keep interrupting you, Steve. Sorry about that. But I just want to say here at CGAP, we work a lot more with funders, and we know that funders have the ability to influence governments. And so in terms of some of the activities we're pushing for is for funders to intervene to support the creation of inclusive policies and regulations. So if there are any forums or collaboratives that can enhance the development of policies that take into account social and gender norms, then we are urging funders to, take that opportunity to influence governments to change these policies. I think there's a bit of an awareness about how laws and policies affect women. And so policymakers run the risk of drafting laws that unintentionally discriminate or have a discriminatory impact. And therefore, we're really pushing for influencing funders to also, again, influence governments to think about women's experiences, the social norms, and other factors that affect the ability of women to engage in productive economic activity, as well as access various resources that are necessary for their active engagement in the economy.
Great, thank you. Again, thank you all for sharing your time and your insights and your experience with us. And we hope everybody who was watching left you wanting to learn more and hopefully get involved in some way. We really appreciate all of your time. If you'd like to help MicroLoan Foundation reach more women and provide critically important training and gender appropriate financial solutions, we deeply appreciate your support. There's a link in the chat to our websites if you want to support the organization. We're working with over 80,000 women, but thousands more are looking for the training and support that we provide. And as Maida mentioned, we're very proud of the impact we've had on almost 400,000 women. 97% of women working with MicroLoan Foundation report an increase in business profits. 98% state they have an increase in self-confidence. You think about gender norms and how important that is. Food insecurity has been reduced from 3 months per year to less than 2 weeks on average. And 97% of our clients are able to save now versus 11% before they started working with MicroLoan. So these are just a few of the areas where we take a look at the actual impact that's having on people's lives and are very proud of the fact that we've been able to help so many people. Thank you all for joining. Have a wonderful day, and we look forward to speaking with you again soon. Thank you.